If you've been looking into investing, you've probably heard the statistics that in the S&P 500 index fund beats above 80% of actively managed funds. And you're probably wondering, well, what does that mean? The S&P 500 is what you call an index fund. So an index fund is like a fund that's basically a whole basket of stocks, right? And these are like basically just every single stock from, for example, an entire industry or an entire stock market. So for example, the S&P 500 is an index fund that holds, so it owns, the largest 500 shares in the US stock market. So with an index fund, you basically get the average growth for your stock market as your return, or you get your average growth for the industry. So for example, let's say if you combine all the top 500 stocks in the US stock market in the S&P 500 and you own all of them, then you'll get the average return of all these stocks, right? And that tends to outperform all these active fund managers who are always buying and selling stocks and for all these different reasons, because I think this one will do well and that one will do well. And so you actually pretty much always outperform them with just trying to keep with the average instead of trying to get too fancy with your investing strategy. One of the biggest advantages of an index fund is that it's passively managed. This means that basically the manager of the fund just buys all the stocks he wants, so basically just every stock, right, in that industry or stock market. This is a really big advantage because that means that passively managed funds do not have a lot of transaction costs. So these are costs that come from when you're buying and selling stocks and you have to give a broker, which is someone who has like a license, I think, sort of, and then so they can actually trade stocks for you on the stock market, right? So you don't actually have to pay them a lot of commissions, right? So for example, in an actively managed fund, your commissions generally eat away about 1% of your total value per year. Whereas in a passively managed fund, this can be a minimal amount because there's barely any trading happening in your passively managed fund. And also, you don't have a lot of costs like the office spaces for the fund manager or stuff like that, because it's just a passively managed fund, so you don't really need all that stuff. So your costs for your index fund are going to be really low compared to an actively managed fund, which already puts it at an advantage. You're also not subject to a manager's luck when you're passively investing in an index fund, because the manager isn't really choosing stocks, right? He's just buying everything. So you're getting the average, and that's pretty nice because you're just like basically floating along on your average of stocks. So it doesn't really matter if something really bad happens to one of them, for example, because you have another one that's doing really well. So like these things balance out to give you a good average that helps you to just have a nice solid investment. Another benefit of index funds for the investor is that you don't have to spend a lot of time picking and choosing stocks, because you just buy this and then you're done, right? So you can spend your time doing other things, which makes your time a lot better and well managed, because you don't have to do all this stuff, right, that you would otherwise have to do, like checking the annual reports and all this stuff. You just invest, leave your money there, and it will grow at a decent rate. Now obviously it won't make you a millionaire from scratch or anything, but if you just want to grow your existing wealth, then it is probably the best strategy you can find. Anyway, if you found this video useful, please do consider liking it, because it helps out the algorithm and helps me to promote investing to more people. Also, if you want to learn more about investing, please do consider subscribing, because that would really help me out and would help you to learn about investing. So anyway, thanks for watching, and I'll see you next time. Bye.